You download your first investing app because someone told you it's free money. The interface looks like a spaceship dashboard. Ticker symbols scroll by. Green numbers, red numbers. You have no idea what any of it means, but you're about to find out. This is what it's like to be every level of investor. Stage 1, the curious beginner. You're scrolling through Reddit at 2 a.m. and stumble onto a thread about someone turning $300 into $12,000. Your eyes widen. You think, why not me? So you download Robinhood or eToro. You link your bank account, you deposit $50 just to see what happens. The first thing you do, buy a stock you've heard of. Tesla, Apple. Maybe some random cryptocurrency because your cousin mentioned it at dinner. You don't know what a PE ratio is. You don't know what market cap means. You're just pressing buttons, hoping the line goes up. And then it does. Your $50 becomes $53. You made $3 while sitting on your couch. That's more than you'd make in interest over 5 years at a bank. You feel like you've unlocked a cheat code to life. You tell your friend, they laugh. You laugh back, but quietly, you're wondering if you've just discovered something real. Stage 2, the overconfident trader. Now you're hooked. That first win wasn't luck. It was skill. At least that's what you tell yourself, so you deposit more. $200 this time. You start watching YouTube videos with titles like Top 5 Stocks to Buy Now and How I Made $10,000 in 1 week. You screenshot your gains and post them in group chats. You discover options. Someone explains calls and puts to you, and even though you only half understand, you buy one anyway. It doubles overnight. You can't believe it. You made $100 in your sleep. You start checking your portfolio every 10 minutes. During meetings, during meals, you're refreshing the app like it's a slot machine. Your friends ask for tips. You give them. You feel like a guru. The high is intoxicating. You're not just making money, you're beating the system. The market is your playground, and you're finally winning at something. But here's the thing about confidence built on luck. It doesn't last. Stage 3, the reality check. One morning, you wake up to red, deep red, that stock you were sure about, down 18%. The option you bought, expired, worthless. Your $200 deposit is now $73. You stare at the screen, refreshing it, hoping it's a glitch. It's not. Panic sets in. You think, I just need one good trade to get it back. So you buy something else, something risky, because safe plays won't recover the loss fast enough. It drops further. Now you're at $40. You've lost more than half your money in 3 days. The group chat goes quiet. No one's asking for tips anymore. You stop posting screenshots. The videos you watch now feel like lies. Those gurus? They were selling courses, not strategies. You realize you weren't investing. You were gambling. And the house just took your chips. You feel stupid, embarrassed, angry at yourself. But something shifts. You don't delete the app. Instead, you open a new tab and type, how does the stock market actually work? That question changes everything because now you're not looking for shortcuts. You're looking for understanding. And that's where the real journey begins. Stage 4, the disciplined investor. You're different now. The charts don't own you anymore. You've learned that the market isn't something to conquer. It's something to respect. You stop chasing every opportunity and start waiting for the right one. You develop rules, hard rules, only trade during specific hours, only risk 1% of your account per position, only enter when 3 separate factors align, support level, volume confirmation, clear risk to reward setup. You keep a journal, but this time it's not a diary of mistakes. It's data, win rate, average gain, average loss, emotional state before each trade. You notice patterns in your behavior, not just in price action. You realize that discipline isn't about willpower, it's about systems. So you build systems that remove emotion from the equation. You set alerts instead of staring at screens. You use stop losses that execute automatically. You create checklists that must be completed before any trade goes live. Trading becomes boring, and that's exactly the point. The thrill is gone, replaced by process. You're no longer gambling on hunches. You're executing a tested strategy with known probabilities. Some weeks you don't trade at all because the setup isn't there, and you're fine with that. You've learned that doing nothing is often the best move. Your account starts growing, slowly, 10% one month, -3 the next. +7 after that. It's not explosive, but it's consistent. And consistency is what separates professionals from amateurs. You stop talking about trading in public. When someone asks how you're doing, you just say fine, because the people who need to brag are the ones still trying to convince themselves. Stage 5, the long-term wealth builder. Something clicks. You realize that trading isn't the end game. Building wealth is, so you shift focus. The majority of your capital moves into index funds. Boring, steady, compounding. You keep a small portion for active trades, but it's no longer about proving anything. It's about staying sharp. You start thinking in decades instead of days. You calculate what consistent returns actually mean over 20 years. You run the numbers on dividend reinvestment. You understand now that wealth isn't built through home runs. It's built through singles that compound quietly in the background. You diversify beyond stocks, real estate, bonds, maybe a small allocation to alternative assets. You're not trying to beat the market anymore. You're trying to build a machine that works while you sleep. Your lifestyle doesn't inflate with your gains. You drive the same car, live in the same place. The difference is internal. You have options now. Financial stress doesn't control your decisions anymore. You can walk away from jobs or opportunities that don't align with your values. That's the real wealth. Freedom, not Lamborghinis. You stop checking your portfolio obsessively. Once a week is enough, sometimes less, because you're not reacting anymore. You're building. And building takes time. You help others when they ask, but you don't preach. You share what worked for you, knowing it might not work for them. Everyone's path is different. You've stopped looking for shortcuts because you know there aren't any. The market rewards patience, discipline, and time. Not cleverness, not luck, just consistency. And when you look back at the person who deposited $50 years ago, you barely recognize them. That version of you thought the market was a game to win. This version knows it's a system to participate in. Wealth isn't about outsmarting everyone else. It's about outlasting your own impulses long enough for compound growth to do the work. That's the final lesson. The market doesn't care about you, but if you respect it, stay consistent, and think long-term, it'll take care of you anyway. So what level are you at right now? Maybe you're still at stage 1, finger hovering over the buy button. Maybe you're at stage 3, licking your wounds and wondering if you should quit. Or maybe you're somewhere in between, trying to figure out what comes next. Here's what matters. Every single successful investor you've ever heard of went through these exact stages. They lost money, they made stupid decisions, they felt the panic and the greed and the regret. The difference is they didn't stop. They learned, they adapted, they built systems that protected them from themselves. You're not behind. You're exactly where you need to be. The market will still be here tomorrow, next month, 10 years from now. It's not going anywhere. The question is whether you'll use that time to grow or just keep repeating the same mistakes with a bigger account. Start small. Stay consistent. Focus on the process, not the outcome. And remember, investing isn't about getting rich quick. It's about getting rich slowly enough that you actually get to keep it. The market rewards patience. Always has, always will.